following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Tuesday morning. And we're going to try to get Steve Banger on with us as soon as we can today. So that's going to be good talks with my friend Steve Banger out of Chicago. We're going to take a look at the Aussie dollar here, leaving rates unchanged over there. Talked about blocking out the long or the short side on this one. This is our weekly profile. It's a little bit wider than the last profile. Started 2 weeks ago and bounced right off that POC there. And we've kind of been talking about trying to buy support, buy breakouts on this, and again, blocking out the short side. But you've got 77.03, 77.11. You know, we've got to be willing to take some off when we reach some of these resistance areas, targets. But again, I mean, this is not the areas to go short. Those are the daily unfair highs and weekly unfair highs. You got to pass on that. You got to just be willing to maybe take half off on this trade, wait and see. Maybe we get another retracement again. Maybe we get a breakout. Maybe we get a close above that 77.03, 77.11 area. That will be ultra cool. Here's the 240s, 76.45's support number on the short term. But really like this trade and really like this thing to really just take a shot north and not look back. I'm looking at 80.81 on this ultimately. Hope you guys in the den are doing well today. Always good comments in the Tiger Den. Keep them coming. Steve Banger, are you there?
I'm right here, John. How are you? Good morning.
Good. How are you? How are you today?
It's a beautiful day. That's all I can say.
That's good to say if you're in Chicago. How
well,
did? Go ahead.
It's Cubs Day today, right? The Cubs are on their way to win the World Series. So
and what are we at? We're at what's the game score now? Is it 3-2? Indians.
Yes.
Okay.
Yes. Correct. Yeah. So,
I'm trying not to even think about it too much because I'll jinx them. What's your thoughts on that? You think they can pull it out? They were the favorite coming into this, weren't they?
Yes, they were. You know, I'm not a big baseball. I mean, I'm a baseball fan, but I don't know much about the sport in general. So I just go with what the papers say. They were supposed to clinch it, but it doesn't look to me now that they're going to win it. So, but who knows? Hopefully, I'm wrong.
Well, for people who aren't really involved with the Cubs or have not touched Chicago really in their lifetime, that is a scene up there at Wrigley Field. I mean, I know you've been there quite a few times, but it's just an afternoon game at Wrigley. God, what do they call that? The world's biggest party?
I don't know.
I forgot what they call
bar,
it.
whatever it is. Yeah, I
exactly.
mean, for those viewers who have never been to it, it's actually located right in a residential area of the city, and the stadium is surrounded by bars.
Yeah.
So it becomes a magnet for people to go to, and because it's in the city, it has such a great vibe that it becomes one big party. And supposedly, for Game 3 of the series, which took place on Friday, there were almost 400,000 people in that area of the city, which is crazy because that area does not lend itself to that many people. And some of the bars surrounding the stadium open up at 8 a.m. in the morning and charge $250 as a cover to get in. That's not for the stadium. That's to get into a bar adjacent to the stadium to watch it on TV. Oh my God!
Well, what's that? That's on Clark Avenue up there.
North
Clark or whatever.
Yeah, Clark and Addison. Yes.
Right.
Yeah.
I used to live. I know you. Well, obviously you know the area well, but I used to live in Lincoln Park up there for a while, and one of the areas that I lived in Chicago, and I was just shocked. I mean, one of the cool things about, I mean, if you love sports, I mean, Chicago, it really doesn't get any better, because you can get on the Blue Line, go see a Cubs game, 2 L stops north from downtown, and then you can head down south on the Red Line, maybe 4 stops, and see a Sox game,
Yeah, I personally would take the purple or the brown line, but yes, something like that. I actually don't take the L much, so I actually don't really know exactly, but something like that, yes.
Well, if you live in the Loop, I mean, it's one of the easier cities to get around in. It's very cool.
For sure.
And then obviously you got the Soldier Field right there at Grant Park, which is just awesome,
Right. That's a temple of joy to Chicago. Not this year, but perhaps next year again.
Yeah.
Because the Bears are doing so great this year.
And then people don't realize that, like the lake too in the background. I mean, in the the right time of year. I mean, it looks like you're in the Bahamas. I mean, that blue hue to that lake is, people don't really realize that. It's just unbelievable.
Yes, it's all these zebra mussels, which are eating up all the plankton, so the fish can't survive anymore. But it looks
which clears
really
the
clean.
water. Yeah.
Exactly. So it looks really clean, but not necessarily for the right reason. But yes.
Well, now that we've covered all that,
right.
What's on your mind this morning? Because we've, a lot of political situations going on that are still up in the air. Before, I mean, we could have a whole day talk about that. But I was, really thinking, Steve, that there's really no way to take I mean, I think a position on the long side right now is just kind of really scary. What do you think here? Like before the election? Obviously, we might have some serious volatility. How do you think this thing pans out as far as the S&Ps go in the volatility scene?
Well, I mean, volatility in general has been rising really since Friday. So when the whole Clinton saga started all over again, there was a huge spike in volatility, and some of the shorter-term volatility indicators are flashing red for all intended purposes. So short-term volatility is now trading at a significant premium to longer-term volatility. And that is usually only the case when the market is under very serious duress, or there's a major macro event shaping up which might unhinge the market. And that's precisely what we have right now, correct? I mean, there's the election on the 8th, and volatility has responded accordingly. How it's going to shape up at the end of the day, it's like flipping a coin, right? I mean, so you can take a bet or you stay out of it.
Well, I mean, as a trader right now, do you just kind of, are the odds in your favor just to kind of sit on the sidelines and do nothing? Or is there any, strategy like political or upcoming political voting strategy that you can think? I tell you what, we got to go to break. Steve, can you hang out?
All right.
Maybe we can get that question answered. Okay,
sure.
We'll be right back, guys.
Okay.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We've got Steve Banger on with us today. And Steve, the question right before we close the last segment is, Joey actually has come on and kind of validated one of the things that you've been talking about. He's like, what are some of the best trades on the books? We've talked about the yen, the dollar, and then just basically the VIX trade, not necessarily trying to pick a direction on the S&Ps right now, but I'm showing on my screen right now, the kind of the long-term December contract weekly view, kind of lower highs, higher lows, kind of coming into a point in the November 8th situation coming up. How could somebody take advantage of anything right now, or should they just kind of wait and see?
I mean, history has taught us that betting on major political events, which can become a toin course or are toin course, is really never a good strategy. But there are two scenarios, right? The first scenario is Trump wins. And the market seems to think that a Trump win would be bad for stocks. So, and I think there's one strategy people can use if they want to play that. I think going into a potential Trump win, buying some S&P puts, just straight puts, but also buying some biotech calls might be a good strategy. Biotech calls, because biotechs have been hammered in anticipation
completely
of big cuts in the reimbursement rates under the Clinton administration. And if Trump were to win, that should reverse itself out. So you have the ability to play this hedge that you say, okay, the market might break down if Trump is going to win, but biotechs should really go up against the grain if Trump wins too. So I think that is a nice setup if somebody really wants to be aggressive about it. On the Clinton side, I think it's a bit more difficult because just looking at the market in general, the market has formed this triangle, this wedge formation, has broken out of the wedge, has caught itself again at that one last line of support, but really it's not in what I like to call a stable territory. So the market in general looks really weak. And I'm not so sure that despite a Clinton presidency, the market is not going to go down. So my bias in the market is down regardless. So
Mine
even
is
though
too.
I'm glad to hear that.
No, it's just, everything you said, it's definitely hitting home, because, the risk is to get long, I think, like you said.
Yeah,
But go ahead.
the market, if you look at it from the chart perspective, we had this wedge formation, the market broke out of the wedge. It stopped right at that last line of support, and the bounce off that line was anything but inspiring confidence, in my opinion.
Yeah.
So we are stuck in no man's land right now, and if we break to the downs, it's not going to be 4% or 2. It's going to go, in my opinion.
I'm with you, man. I think that my opinion, just like yours, the risk is to get long here. But how do you take advantage of it and kind of hedge your bets if it's possible? I haven't looked, and I know you kind of watch these options volatilities a little bit more than I do, as far as the different components of what's going on with the options and the pricing. But even though the market is contracted, have you noticed any anomalies going on with kind of near-term volatility, long-term volatility, things like that?
Yeah, ever since last Friday, volatility has really increased throughout the curve, and quite a bit actually. Yeah, so volatility has definitely been picking up, which would indicate that a bigger market move is expected. One way to play those type of events, and I want to be careful about it, right? Because you're really taking a shot at something which is not in your control. But one way to play that type of event is to play calendar spreads.
Okay.
And what I mean with that is you could theoretically sell VIX calls, perhaps 40% out of the money, something like that, with an expiry date of the 11th, which is a Friday after the election, and buy calls in the following week. And the rationale behind it is that we might get a big move in volatility to the upside, but you should be so far out of the money that the October 11 call is going to expire worthless. But the October 18th call should pick up quite a bit of value, because volatility, when it rises, should then create some significant profits in those. And
it'll just get dumped over.
Yeah, so in case the market completely falls apart, which I don't believe it will, but in case it completely falls apart and the S&P is down 10%, which I think is not very likely scenario, because you have a calendar spread, your risk is really limited to the premium difference between selling the options and what you have to buy on the longer dated calls. So it's a limited risk trade, but I think it is something which can go 300% or so if volatility really picks up.
Is it even worth doing that type of trade on both sides, or is it, trying to do some kind of, calendar spread, complete neutrality type thing? Like you said, a little bit out of the money, but would it be worth it even trying it on the upside there?
Well, it is, but one of the problems, or one of the advantages when you play volatility, is that there's a natural floor to that market, and that floor usually comes in, let's say, around 13, right? So volatility will bomb down to 13, but then it has to work its way lower. But even if it works its way lower, it's not going to go down to 8. It's going to go down to 12, right? So there's this natural floor in volatility. So that strategy definitely can work, but it's just not as rewarding as if it were to work on the upside. So it does work too, but playing on both sides, you really take away from the profit potential, but it's one way to play it, for sure.
Okay.
So,
thanks for pointing out that XLV situation, because that's obviously, and I've been watching that in the scanner. Actually, I think we talked about it actually a little bit yesterday. That has just been hammered. And some of the instruments in there, I mean, have you kind of drilled deeper into? I know you've. I mean, that's kind of a default
Well,
thing.
I mean, if you don't mind, just pull up Kite, Kite.
Okay.
Just,
We have about 20 seconds before break, but I really want you to hang out if you can through the break to talk about this. But here's Kite on the long term. I'm showing the weekly right now. Okay.
All right. So Kite is one of those stocks. It's a biotech, which is really. Is that Kite? Yeah, that's it. Okay.
Okay. Hang on, Steve. We're going to be right back, guys. Give us about 3 minutes, and we're going to pick this up when we come back.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Steve Banger on with us this morning. And, Steve, my e-signal rebooted here. Let me pull Kite back up, Kite. We're getting ready to get into this. And this is a biotech stock, and I'm going to let you take it from here. Got it back up on the screen.
All right. So, and I think that serves a pretty good illustration of what is wrong with the biotech sector right now. Can you go back a little bit longer? By any chance? Yeah, perfect. All right.
Kite.
Yeah, that's good.
Yeah.
Yeah, that's it. So,
Okay.
So Kite is a biotech which is developing or has been developing an immunotherapy which can be used to treat Hodgkin's lymphoma and other blood cancer diseases. And they came out with stage 2 trials and really knocked it out of the ballpark. That is 35% remission rate, 100% remission rate,
Wow.
and another 34% partial remission rate. And these were stage 4, stage 5 patients for whom really there was no other valid therapy available anymore. So by all accounts and purposes, it is a huge medical advance, and it clearly works. And the stock barely went up to $60. It basically went from 50 to 60. That's what you see on that when your chart is green. And ever since, it's been trending down. And looking at this, I think the only conclusion is that the general market environment is so weak in the sector because of pricing pressure that you really cannot be long it. I mean, if Kite, which I really consider to be one of the best of the breed, can buck the trend, I mean, any of those things which are in development and where the revenue outlook is shaky and where validity has not really been proven yet, I mean, there's no upside here under Clinton administration. But I think it's one of those stocks when and if Trump comes in, huge upside. Because it's not, you know what I'm talking about, right? So it's not the medical or viability of the treatment which is reflecting the stock price. It's the revenue outlook.
Yeah, I mean, and that goes back to, Trump winning, if Trump wins, God, I mean, so many mechanisms, are kind of like already in place that might disengage and, relative to what you said about, Hillary coming in. What do you think? Like, I mean, I look at Paddy Power out of UK betting. I look at like 4 or 5 different political betting sites. The odds are starting to change a little bit. But what really do you think the odds are that he would somehow win the presidency?
All right. If you would have asked me 10 days ago, I would have said Clinton is going to win it. It might be close, but she's going to win it. But 2 things happened last week which changed my mind. First one is I watched that Michael Moore 2-minute video, which has been circulating on Facebook, and I would strongly encourage everybody who hasn't seen it to go and look at it. I mean, clearly Michael Moore is not a Republican, right? He's a Democrat, and he makes the argument in that video that Trump is going to win it because of how the homeland of this country has gotten the finger for 20 years. And it's a very passionate plea or explanation, I should say, but I think there's a lot of truth in what he's saying. So that really got me thinking. And then the other day I got back into my car, and my car still set on AM radio because I had been listening to one of the Cubs games while driving. And it just happened to be that Sean Hannity had his show up.
Okay.
And I usually never listen to the guy, not because I don't like him, also just because I just don't listen to AM radio.
Right.
And he went through all the polls out there for the individual state races and talked about what Trump has to win and the margin of error versus the lead Clinton has right now in any of those states. And even though from like a bird's eye view, it looks like Clinton has a very solid lead in the electorate, once you really go into the state-by-state polls, and that is what he did last week, you realize that a lot of races are within the margin of error. And that in combination with what Michael Moore said kind of changed my mind, because one of the key things Moore said is that a lot of people who have never voted before are very motivated to come out this time around because they really feel that for once they have the ability to show the establishment the finger. And I think he's right on that one. I think there are a lot of people who are going to come out of the woods who who are not reflecting the polls right now and going to vote. I really believe that.
I think there's 4 or 5 points, just like you said, exactly what you just said. Anybody who is for Trump is going to make sure they get to the poll or send in the ballot or whatever. And then, the people who aren't as convicted, especially, I don't know how, I don't know what the conviction rate is on Hillary for people who just would vote Democrat normally, but there's a good possibility a lot of those people, okay, it's too much trouble, the line's too long or whatever, and they might not vote. And again, I think there's, just like some of the polls, a lot of these states, Trump wasn't supposed to win in the primaries, but he kind of won them in landslides sometimes, and that was because of that conviction, deep.
Right.
Got to go to the poll. I'm going to, give the finger to the establishment type thing, like you're talking about.
And just think about what a poll is. It's 1,000 people giving an opinion, which is nothing in terms of like actual number. How do they get to the 1,000 people? It's prior voting behavior. It's likely voters. For the most part, that is what those polls are. So anybody who's voted in the past couple of elections is supposedly being reflected in those polls. But that's not the issue, right? The argument is that a lot of people are going to come out which have not voted before. And it doesn't need to be a lot of people because those polls are closed anyhow. All what it needs like an additional couple of percent here and there, and Trump is going to win it. And I think that unaccounted for electorate, the way the polls are designed nowadays, is just not being considered. So,
and that gives us more and more reason. That gives us more and more reasons to do the volatility trade. Because just like the Brexit thing, the people, a possible reason that kind of flipped into the exit state that it's in right now is because the people had those deep convictions. They definitely went there, and the polls, really had that kind of wrong way skewed to them because of everything you just said. And I think this is a very similar situation.
Yeah, I think it's even actually more, quite honestly.
Yeah.
I think it's more because the way our polls are designed, right? It's all about like past voting behavior. So if you haven't voted in the past couple of elections, you're just not part of the polls.
Right. And, we were talking on this show about, buying some lottery tickets just in case on the Brexit. And you know what happened to, the pound? That thing was down 1,000 pips or so, wasn't it? I can't remember. Yeah. That was just like make your whole deck. That was a make your decade trade. Steve,
I like to call a widow maker.
Hey, thanks for coming on today, man.
All right, perfect.
Great conversation. Okay,
likewise.
Guys, we'll be right back. Thank you very much, Steve Banger.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back. And thank you, Steve Banger, for coming on and providing some of that insight. Gives me more and more reasons to put on that volatility trade and maybe get a little heavier on it. I mean, this is going to be some fireworks. And again, just like the Brexit situation, I think you've got an insane risk-reward scenario setting up. If it doesn't happen, it doesn't happen. But again, some of those types of trades you can make your whole year, just like the Brexit situation. It's part of the equation of doing trades like that when they're offered, and you don't get these that often. Could have a massive move. I'm showing the TFNN homepage right now, and I just want to remind everyone that Nico and Paige, if you go to the homepage, you'll see this. If you don't watch this show, do yourself a favor, check it out, watch it. I love to have it on the background when I'm kind of getting my morning going and pick up some great information. But Primal Edge Healthy Holiday Special, save $25 this month. Just might want to look into that, and also catch our show when you can. S&Ps, we're going to, again, we've got, let's see, this segment and a short one left, but just want to reiterate, 2134, I think, is that big number you can lean on the short side right now on the S&Ps. We're going to hit crude really quick. And crude, wow. We've talked about kind of staying away from the long side on this. Excuse me. And we talked about the ultimate targets after we had breached and closed below 49.52, kind of bumped up against it this past, or actually towards the end of last week. We talked about ultimate targets. Initially, we're going to be 46.23. So we reached now 46.56. We got in that neighborhood. We're bouncing a little bit. So we've met initial targets on the short side. We talked about this fair auction being explored on crude. That's happened. Got a little left here, but don't want to get stingy. Here's the daily situation. There's that 49.50 area that we kind of consolidated around and then had another move down. So crude kind of done what it's supposed to do right now, and I think you just kind of trades over for a little bit on crude. Gold, and I was surprised this actually didn't happen earlier, but kind of came off 1278.5 and talked about it was just a wait and see. Now we've breached the daily profiles, gotten above 1278.5. Any daily closes there are going to be pretty impacting, and then the next stop up is going to be 1300. So there's the and again, that's what these inflection points are for. If you're looking shorting against it and hitting down into 1252 and lower, I wasn't thinking we were going to move up like this, but that's what stops are for. And 1300 is bottom of the profile on the weekly there. And again, I was kind of amazed at gold was sitting in a range with the political uncertainty happening, but now starting to break out of that daily range, and 1,300 psychological number up top could be the next level up on gold. But if the numbers start, if these newest, I guess we're going to have some more solid poll numbers coming out by Wednesday. They said that's going to have to kind of take a while after the latest, greatest political fundamental information to get some, I guess, more valid polls. But like Steve had talked about, no matter what those numbers are, you probably can add at least a couple of points in Trump's favor based on those convictions. And then, that's not some mystery that other people haven't thought about. But gold, could start rallying just based on that alone. So, again, don't hang on to shorts when they pass some of these borders. Dollar. Let's take a look at, all right, so got a weekly kind of yellow peel back in the scanner on the dollar right now. We've definitely breached support that we were looking at, 98.20, that we caught a bounce off of. And again, this is kind of what I orient stops around. Next big support down below is 97.75. So it's either kind of a wait. This pierced this a little bit farther, and I wanted to kind of suck it up and take it. So that's kind of a sitting in no man's land, still trading above profiles on the weekly. Got a new supply area trying to happen, but it's a wait and see now for me to get either a daily close back above 98.20 or come down into support 97.75. So dollar, I'm out of that trade. I'm a big fan of being long the dollar in general. Let's look at some currencies really quick. All right, looking at the pound here. Again, we've kind of explored the entire fair auction again. There's the 122.83. There's the 121.58. So we've hit it this morning up top, 122.81. So missed that by 2 ticks. But I think you guys can see what's happening here. We're just spinning around within the very tight profile. And we talked about waiting for daily closes outside this particular range. But we continue to stay in that range. And I think the stronger trade's going to wait until we have a breakout outside of that range. Here's the yen trade. I still love this thing. We talked about it. You're going, okay, great. Let's talk about the yen again. But here's the top of the profile here on the new daily box today, 104.87 and then 103.78 down below. So you got support there on the intermediate. The weekly's still great looking. Not a big fan of shorting this, just blocking out the short side, and you got a chance kind of upper support at around 104.87. We talked about the Aussie. We're going to take a look really quick at the Chinese currency. I still, think this is a big mega sign that we're still going to go higher on the Chinese currency here. This is our daily profiles well below price action. Here's our 240s. Short-term support now at 676.89, blocking out the short side on this particular trade also. All right, let's take a look at a couple of bellwethers here. Apple. And really was hoping that we would get a retracement back up into 114.82 after that weekly close in the box down here. Wide profile. I think we're going to start exploring this. That's where you can orient stops above 114.82 on the short side. I think we could easily get back down into 110 and even lower on Apple. So if you're long, you got some things to think about there. I think you got to just sit, be out of that trade if you're more leaning towards the long side. Here's Facebook. It's big time support, 130.14. Tesla, it's just amazing. There's that selling point. We talked about 214.06, and now we're starting to breach, get some momentum below 201. I still love this trade from the short side, folks. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Wasn't looking at the Colombian peso. I guess it is time to move the headquarters to Mexico. We just bounce around. Let's take a look at a couple other stocks really quick. Johnson & Johnson. This is one still pretty bearish on this stock. I think you've got some decent places here to lean against. If you're looking to trade some individual stocks, 116.33, defense up top. I think we can at least explore that profile, 113.55. I don't think the market's going to give anything any help anytime soon. I think, if you're, talking about some of the things that Steve had brought up in that light, I think some people, portfolio managers, could be kind of leaning to kind of just lightening up at bare minimum. That's going to put some kind of pressure on a lot of different instruments. When you hedge portfolios, a lot of these, you look at a market maker, how he runs his book on the CBOE, when he has to start selling puts to somebody who's buying them, then he's got to hedge himself by either shorting baskets of stocks, shorting the index itself. I mean, there's a lot of different things that happen. You know, even though portfolio managers might not be actually just hitting the sell button on individual instruments, if they're hedging, buying puts, selling calls, whatever they're trying to do, a lot of those mechanisms that they'll put in place drive the selling of stocks anyway, even if they don't directly do it. So you got to kind of keep all these things in mind. Okay, well, it might be, you know, something they don't want to do is just get out of instruments. But if they start putting on hedges, that also can drive the index down, or stocks in general, just because of those default mechanisms that are happening on the market maker side. So keep those in mind. I'm sure David White talks about that at times. Talks about a lot of cool mechanisms going on in the background. Catch his show. If you haven't, you're in for a treat. Here's the 10-year profile appearing above price action today. That's bearish. We all know that. There's that big number right there, 129.22. I'm not a big fan of trading the treasuries right now. Just wanted to give you some numbers there. A lot of comments in the den this morning. I'm trying to keep up with them while we're talking here. Couple other stocks. I wanted to look at our favorite company out there, Wells Fargo, and talked about this one yesterday. This is kind of cool how this works out. I just want you guys to see that this. I keep it really, really simple. Breakdowns, sell resistance on situations like this. Sometimes, like on the yen, it's buy support by breakouts. Wells Fargo, sell resistance, sell breakdowns. So 46.53, talked about this one. We had kind of gotten into that area. Good place to play defense. News-driven stock, obviously, and had, you know, really traditionally, even before all this mess happened, had been the weaker stock of the sector. So you got a couple of things in your favor here, and still a big fan of shorting Wells Fargo. All right, got a couple of seconds here before we go into our... Oh, God, we got to end the show in a couple of seconds here. Whoa, man, that crept up on us. Well, guys, look, stay tuned for Larry, David White, Steve Rhodes, Basil, Tom O'Brien. God, I hope I didn't miss anybody. And Andy Hecht actually's show today, I believe, too. So just stay tuned for TFNN all day, folks. A lot of activity happening in the markets these days. Be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.